Hi guys, hi everyone. Can you guys hear me and see me? Okay, I will check. Okay, good morning, good afternoon, good evening, wherever you are. Welcome to IC Market webinar. Hi AJ, nice to see you here. Okay, we are on time, so basically we just wait for 1 to 2 minutes. All right, for everyone to tune in, I will start the section. So basically today I'm going to share with you guys about Harmonic trading strategy. They're gonna be two part, which is part one. Basically, I'll just maybe cover like the key basic, and then for part two, basically we will focusing on the Harmonic pattern, how we're going to trade. We're going to play the stop loss and take profit. Okay. Okay, so let me see. Okay, shall we start? Oh, okay. So again, good morning, good afternoon, good evening, wherever you are. Welcome to IC Market webinars. Okay, so before I start the webinar, disclaimer first. All right. This is marketing communication and does not contain and should not be construed as containing investment advice or investment recommendation. IC Markets make no representation and assumes no liability as to accuracy or completeness of information provided, nor any loss arising from any investment based on recommendation, forecast, or other information supplied by IC Markets. And risk warning over here, trading for the NCFG carries significant risk to your capital and it's may not suitable for investor. All right, so please come and join the webinar and learn together. If you have any question, you can just send in the question over here. I will just answer you guys. Okay. About myself, my name is Peggy. I'm investment analyst and a prop trader as well. So if you've been watching or following me, okay, you should already know me by now. But if you are new, you can let me know as well. Okay. So the agenda for today, I'm going to talk about overview of harmonic pattern, identify the key pattern, the rules of Fibonacci ratios, setting up your chart and light example. Good day to you too. Where are you from? Jamilus, is this? Did I pronounce your name correctly? So basically, okay, the overview of harmonic pattern strategy. So basically, we only know that harmonic trading is a method of technical analysis widely used in forex, stock, or other financial market. It combines geometric charts, pattern, okay, and Fibonacci number to identify potential market rewards. So basically, in this section, we will learn about the theory behind the harmonic pattern strategies, okay, and the core principle of Fibonacci. Okay, because if you guys know that harmonic pattern and elevate, we heavily using Fibonacci level and Fibonacci projection and extension. Okay, for Fibonacci ratio are the foundation. Okay, so the key level includes either you put 0.61 or 61.8% Fibonacci or extension 161.8%. Okay, and how you going to identify the key point? So basically, in harmonic pattern, they will have Fibonacci ratio, and we're going to have like a reversal zone. Okay, so this slide I will come back later because for the harmonic, okay, they're gonna have a 5 pattern. Okay, don't worry because this 5 pattern I will go in depth, which is the next webinar. Okay, so but basically these are 5 common, which is we have gauntlet, crab, shark, bat, butterfly, and cipher. Okay, but before we jump into harmonic pattern, you need to know AB equal to CD. Okay, I have the example for you. Later I will show you guys. So basically, AB and CD leg, which is a AB here, equal to CD if I said it's a pattern typically involved in shaft move in one direction of the AB, which is over here, and then retrace back to BC and follow the move of CD. So if you go to the chart, maybe I have the example over here. Okay, is right here. Let me finish the slide first. And BC retracement. So most of the time, if okay, BC retrace at 65%, no, if C retrace at 61.8%, BC extension should be 161.8, or AB equal to CD, which is, this is what I mean. I have the example, which is EU, the current of this one. Okay, so just now I was saying, where's my okay, I was saying AB equal to CD, right, which is here. So if A, B, O, B, C, C, okay, here, okay, in the harmonic, okay, the Fibonacci we are using, which is this one, this is a setting. Okay, this is a setting, guys. You guys can either you do a skin capture or this one. Okay, here. Okay, this is the level for harmonic pattern. Okay. Okay, why I want to start with AB equal to CD, I will show you guys. Okay, over here, if this is a B, C, and D, right? It's here. A point, you pull Fibo from your A to B, okay, over here. If C point retrace 61.8%, okay, BC extension, which is the D point, will go all the way up to extension 161.8, which is over here, right? This is a BC extension. Or AB equal to CD, what you can do over here, A, oof, again, okay, A to B, this color, okay, maybe I do this color. Okay, you can see it. You can copy. Oh, talking about this one, right? You can see that the C point to the D point, right? This is AB equal to CD. I mean bigger, so you can see like 20. Do you see that? Some of the trader, you can trade already, you can see that. So the harmonic pattern, what we left out with X, right? Because for the harmonic pattern is what? X, A, B, C, and D, right? It's over here. It's so like messy, so I choose no. There is the line of the border. Okay, you see that, right? You can see that. So if I want to draw, this is A, this is A, B, C. Maybe it's a red color, the big one. So what we miss out is X, right? This could be X. This is a X, right? It looks like harmonic pattern. Here, X, A, B, C, D, A, B, C, D, and then you just miss out one leg, right? So this is a X, A, B, C, D. So most of the time, okay, what if, another one is if I remove, okay. Maybe I have example of this one. I have another example is this one. Okay. So this current price is my sales zone basically. So another one if okay, maybe take note of this. If AB retrace 61.8 percent, 61.8%. Okay. So 0.8% BC extension, okay, BC extension will be 161.8%. So if AB is 78.6%, okay, BC extension 127.20%. How? Okay, let me pull here. Okay, I do like that first, okay? So A, B, C, and D. Okay. We pull people from the swing high to the swing low. Oh, no. This is A, B, C. This leg it don't have. My apologies. Okay. BC 78.6%. If C retrace 78.6%, right? The BC extension, what does it mean? BC extension is that this one retrace, sorry, 78.6%. Right? It's here. BC extension. Now we will use the extension BC extension 127.20, which is right here. Okay. What does it mean AB equal to CD? So you can use the rank of the AB, right? Oh. And you see? Will be equal, right? AB equal to CD. So they just miss out one leg, which is D leg. This is one, which is X. So this is already harmonic pattern, right? Here. This is X. Okay. So this is the one. Look here. Is it AB equal to CD? The A, right? You can see B retrace how many percent? 61.8%. So let's say, okay, they retrace where? Here. Oh. They retrace somewhere around here, 61.8% or 78.6%. That doesn't matter. So in this case, okay, I just will just keep 61.8%. So What about this resistance level? BC extension, so that would be maybe 127. You can see that 127. So you keep what 127 extension, right? You can see the 127 is over here. You hang on, okay? Wait, I know somebody sent me a message. This pattern occur when trend is bullish. No, there is no. You can do in bullish or bearish pattern. Okay. I will show in another pattern. You just hang on. So in this case, right, you can see that price is where at our extension. Is this BC AB equal to CD? I'm just this the range, right? You can put from here to here. Is this going to revert from this level? Okay. Okay. Right, you can see that here. So is this AB equal to CD? Yes, right? And it's means one. This one might like look like harmonic pattern. This one could be this one look like harmonic pattern to me. Okay, which is XA. No, this is not, right? You can, this is not harmonic pattern already, meaning that A should be here. This will look like harmonic pattern because B retraced somewhere around here should be like 61 or 50%. So if you see like that, it will look like harmonic pattern if A like over there. Okay, right? But if you were to trade, some of the trader, they only trade based on like AB equal to CD pattern. This is the pattern. Some of them. So, never mind. Right? Okay, so yeah, you guys clear about it. So this is sell zone. If you want to sell GBP, this is the sell zone. Okay, this is already at my sell entry. So this is already, or this one could be. Okay, so this is done. Alright, this is a good example of AB equal to CD. You guys have any question? This is what about if we want to look for bearish. I'm not sure if I can find. Okay, because just now only find XAB. Maybe this one is should be no, this one is not, right? Why this one is not? You can see it's retraced 78.6%, yeah, maybe. And then this has to be extension 127. Slightly above this one. Okay, so it's not. Let me try to find another. This. Anyway, okay, if I find, I will let you guys. But basically, this is the one. Okay, so just remember that if C retrace either 61.8%, BC extension is 161.8, right? If C retrace at 78.6%, BC extension is 127.20. Okay. Any question? No. So this is you can like have a picture here if you want to. You can see that if C point retrace 61.8% is a common one. So BC extension is 161.8. If C point retrace 78.6%, BC extension 127.20. Okay. You guys have any question? Okay, so now how to find AB equal to CD? Like I say that the retracement of the C point, all right, will determine the end of the D point. right? So you can see that if C retrace, this is the determinant of the D point. Okay, so the D point, you draw Fibonacci extension from B to C, right? You can see that from B to C, right? You can see that. So you see you draw Fibo from your A to B and then C, retrace how many percent of this one. Okay, will determine the D point, and then you draw the Fibonacci extension from B, and then you will get the C leg, you will get the D leg. Okay, the D point measure from A to B. D point can use Fibonacci expansion as well, but I use Fibonacci extension. Okay, the end of the D point we call reversal zone. Okay, it should line up or close with support, resistance, demand or supply. That will be end of the D point. And then from the D point here, we will call reversal zone. Then you will start to sell. Okay, how? For example, is over here. EU, right? For example, I'm talking with the EU here. So now my EU is the sell zone, right? The sell zone is my sell zone. You can see it BC extension, right? So here, the line AB equal to C to D here, right? And over here, if you look to the left, what do you see? The D point, the end of the D point is okay, it's here, right? This is our D point, right? It should align with demand and supply and or either supply and resistance, which is this level based on head 4 time frame. What is this? If you were to draw from over here, you know this your supply zone, or somebody call what? What you guys call this? Bearish. OB stand for order block, right? This is the one. But actually, bearish order block is just what? Price action for bearish engulfing candle. And you can see that, right? So this is your bearish order block. So the D point here, so you can sell. This is our sell zone. Okay. Right. And if you were to go down, which is if you like conservative trader, when price come to the zone, I always say that if you want to look for the confirmation, the lower time frame, M15, what do you see in M15? Either they make a equal high here, right? Or maybe in maybe M15 you see the rejection. You see in H1 see the rejection as well. Maybe there's a no divergence, but the confirmation is to me, which is a M, maybe M15 or M5. Okay, M5 is look nicer. Either that you can look for the M5, which is equal high, right? So basically within our bearish order block, okay, it's just ending with the D leg or the D point. Yeah, bearish order block, yes. Okay, so this so this either you identify as your supply zone or bearish order block, or you say that this your what? This your our resistance level. I start to here. Okay, this is our lovely resistance level. Okay, and end of the D point or D leg, and within our bearish order block, and then we sell, right? You sell here, and price already. This is head 4 time frame. Is falling. How many pip now? It's about 59 pip. Okay. Any question? You so far so good now, or any no question? I will continue. Okay, so you can have these pictures over here if you want to. Okay, so the harmonic pattern, this is the I cannot see you guys. So harmonic pattern we will have retracement and extension. Okay, for the PRC zone, which is stand for potential reversal zone. Okay, we have XA, BC extension, alternate B, AB equal to CD, which is the retracement. For harmonic pattern, we have Gatley, we have bat, meaning that what I mean like retracement, meaning that where is my okay, meaning that the D leg, okay, cannot go above the starting, which is X. Okay, so this retracement. Okay, for the extension, meaning that B go beyond the X point or X leg. Okay, so for the harmonic pattern, we have alternate bat, butterfly, and crab. Okay, but all these pattern I will heavily go, which is the next webinars. Okay, so just remember this. Okay, for harmonic retracement we have garlet and bat, and for harmonic pattern extension we have alternate bat, butterfly, and crab. Okay, you will common see this one. For example, if you want to look for bat pattern, so remove. Oh, some of you guys asking me if there is an indicator. They might have an indicator over here, but do you have hidden? It's not technical. Maybe just search. Okay, if you just maybe search one like maybe indicator. I'm not sure we have. I think they might have one harmonic pattern. This one I don't think you can use, like you want to use like this one, for example. Okay, for example, this is a bat. Okay, they said it's a bat pattern. Do you see that? Right, this is a X, this is a D point. You can see that the D point here, ending of D point is not go beyond it of X, A, B, C, and D, right? And end of the D point will call reversal zone, which is you can see that your confirmation price will falling from this one, which is you can see that your price action, okay, in the D point here, and it line up with your resistance level. You can see that your resistance level over here, right? You can see that this is your D point is here. You can see this your overlap resistance level, and also close to your what 61.8% fib level, right? You can see that this one. So so one price completes or end of the D point. Usually it will trade with harmonic pattern. For the harmonic pattern, we will wait for D point to complete, and then you play for the reversal, which is in this one for the PRC, which is this one, right? The PRC zone, which I just mentioned. Either you have line up with support resistance level, supply zone. You can combine with 61.8, which is have Fibonacci level here, and then you can see that one price go to like complete the D point. You see the price action, you sell, right? You can sell here. So this is your complete the D point. So if you if you already know how to trade, or you already like master the harmonic pattern, you ask me like, oh, Peggy said just wait for the point to finish, and then you just wait for the confirmation, or you sell at the D point. What if can I buy at the C point, C leg here? Yes, you can if you know how to trade, right? Huh? How are you? Oh, somebody, okay. Oi, coca. Silver, okay, you have to wait because it's not live transaction. I will look for you later. Okay, so this how, okay, you trade. If you want to use those like a pattern, you can just go for harmonic pattern over here. Okay, what about another one? EV, what about Gatle? I think now they're scanning. They're scanning. Okay, so basically I don't use it. Okay, so what about this one? Let me copy this to the. Let's see if I were to do like that. Okay, what if I see point? Where is my okay. What if I just want to do this one? Oh, A. B. C. A. And D. Okay. So let's say what if C point retrace at 78.6% fib, which is here. Okay. They say that BC extension, which is around where? It's here. BC extension. Okay. Do you think this is like AB equal to CD? It's not all the time, but most of the time, okay. If B retrace 78.6%, D point will be extension 261.8%. Oh, I cannot get the miss. Right? It's somewhat, but not all the time, right? You see that? But most of the time, if C point retrace 38.2%, D point will be 261.8% Fibo extension. Let me find the example for you. You can have like these pictures. Okay, you go and try and trade like this retrace. Okay, I'll find the example for you. 3.2%, that will be only small retracement, which is this is 50. Okay, let's say if C point retrace at 50%, which is this one. Okay, BC extension A, B, okay, C, BC extension, which is 200 to 224%. Okay, BC extension, which is B, and C extension, which is where you see here. Meaning that I will put here for any one of you guys, like, you know, don't have confidence, okay, in holding the position longer. Okay, GBP also same, yeah. GBP also have AB equal to CD. Yes, I already showed at the beginning of the webinar. Like if you have confidence in holding the position longer, you should use this method as well. then after that you just use the trailing stop loss, and then your first target, let's say if they trade at 50%, okay, your TP should be where? This level or 161.8. But of course, right, the graph is not, you know, go in a straight like that. You may have to, like, you know, move up, move down, move up, move down. So that's why you need to use trailing stop loss. But this method, okay, is give you the confidence, okay, but not 100% guarantee that, you know, if you like that, but 80 to 70%. So it give you the confidence, okay, I'm going to hold, okay, the trade to hit my take profit based on this table, like these pictures. Okay, you can see that 50%, okay, and you can hold to where 200% extension, or the last one is here, 261.8%. Okay, what is another example? This is the basic, okay, for a harmonic pattern. That's why you need to know what is AB equal to CD, or reciprocal AB equal to CD if you like, you heard from like other channel. Okay, but this is like the key basic or fundamental for harmonic pattern. What if we find another one, they retrace X? Okay, remember that some of you guys, like when I was sharing with you guys about Fibonacci retracement, and then you asking me what if like 88.6%, like I just mentioned, 88.6% we use for harmonic pattern. Okay, for Fibonacci retracement, what we are using only 23.6%, 38.2%, 50%, 61.8%, and 78.6%. That is Fibonacci retracement. Okay, which is if like different number, 88.6%, this one we using for harmonic pattern. Okay, because for harmonic pattern, there is some pattern C will retrace at 88.6%. Okay, and the rule for harmonic pattern, which is X, no, this other wave, X, A, B, C, D. There's need one rules, okay. C, this is the beginning of the A leg. The C point will never ever, but there is a one one harmonic pattern, but 95%, okay, or you just remember the rules, okay. C cannot go below the beginning of the A point, okay. For the harmonic pattern, you need to look for this kind of pattern, okay. If D not go beyond the X point, they will have what pattern? The retracement, they have two pattern, right? Remember, we have what? Gutlet and bat. So D cannot go beyond. So if extension, there will be harmonic. There will be alternate bat, crab and butterfly. Okay, which is D will go beyond. There will be extension. Okay. Which is the best point to scalping for harmonic? D point. You need to wait for D point to complete, and then you trade. For the harmonic pattern, because for the harmonic pattern, we wait for the D point to finish, and then we pay for the reversal. Okay, that is different from elliott wave. Elliott wave, like you trade with the trend. Okay. Maybe I copy this one. I go for another this one, very nice resistance level and price falling. I try to find the small retracement. This is 50%. BC extension to where? 200 and once 200 and no, this is my was here. Right, you can see almost here. Retrace 50%, BC extension from the BC here, right? You can see the extension almost hit 261.80, but of course this is between the D point, right? 200 and 261.8% for the if the C retrace 50% right here. Okay, maybe this another example. This is another 50%. I want to find another like the retracement. Let me see. Okay, what if this also retrace 50%? Definitely you will see that extension is right there, right? You can see that. And then you can see this is the resistance level, right? Resistance level. And the rejection here also have the order block, bearish order block over here, right? You can see that like they retrace 50% here from this point. You can see that from this point all the way up to the resistance level. And we know that this one come from the support level, right? This one, you know, it come from the support level. That's why we buy, right? This is our support level over here. The rejection, and one price create a high, pull back 50%, and then you hold. Okay, this is your target at the next resistance level. Okay, so okay, let me just as like a the key point. Okay, so the key point, just for you to remember, AB equal to CD first, which is which one? This is the picture, easy. Okay, so if the C point retrace 61.8%, right? The BC extension 161.8. You just remember these two. That is good enough. If C point retrace 78.6%, BC extension, which is 127.20, which is I highlight in yellow. Okay, the red, that doesn't matter. But most of the time, you see that C point retrace 61.8%, you hold up to extension 161.8. Okay. Here, let's see here. Retrace where 127.6%, right? So the BC extension, which is 127. Okay, for example, this is the one. You see, it's not always okay. I want to bring down the table here. It's not okay. Yeah. Like here, right? They say that 78.6% retracement, right? BC extension is 127. Where is our 127? Our 127 is here, right? But why price reward from this level? If okay, price falling, you need to take note is that your A, B, C, and D. The D point, why it retraced? Because you know that this is your support level, right? If you want to put exact where at 127.20, you might miss the take profit because this is our overlap support. Okay, the D point have to line up or close to supply, and in this case it demand, right? You see that one price come to the support level, they will tell you already, hey guys, I'm going to reward from this level where you see your price action here. In H1 time frame, you see your price action. So if you were to put exact at 127.20, you might hit the take profit. right? You can see that they already tell you that, hey guy, I'm going to reverse from this level, so better close your sell entry. Okay, so this is a good example. So it's not 100%. Okay, so this is just an idea for you guys to hold the trade. Okay, any question now? Okay, let's see. We still have 15 minutes. I will do the gold trade setup for you, but basically gold is at my sell entry right now. Okay, I still hold my trade. Just now price falling almost 100 pip, I did not close. Okay, so this is my sell entry for gold. Okay, which is price go to my resistance level. I have 61.8% fib level. Okay, this is my golden zone. So if price break above this level, the next resistance is here at this level, right? The next resistance level is this level. I go to H1 so you can see the better, which is here. Okay, so just now price go here, I was so happy. Why? I can see that, you know, there's a price action and then price is like rising but still within the zone. Price is falling, but it seems like they cannot close below. So but price falling more than 50 pip, they cannot close below like this level, right? The wick, and then just rising. You go to M15. I still hold because they make a lower high. I see the price action, so I still hold my trade. My target is about 100 pip. Okay, so you can see that. So if you want to have like, you know, very easy trade setup, okay, basically just back to basic. You just identify the key level. You can combine with Fibonacci level, and again, if you want to sell, you need to sell where? You need to sell at the premium, right? The premium zone for Fibonacci. You know that? The premium, which is above 50%, that's called premium, so you sell. If you want to buy, you need to buy at the discounted zone, which is below 50% for the buy entry. Right? For example. Here. And over here. If you want to sell, you need to sell at the premium one, 50%, which is above 50% and 78.6. So this is you're gonna sell. So basically we sell at the premium, right? And we buy, you need to buy at the discount zone, which is below 50%, and then you buy. Okay, so this are still this already at sell entry. Okay, but if price break above for resistance, which is 29.17 there, okay, the next sell zone is gonna be at this level, and I believe that's gonna close to 78.6% fib level. Okay, so for the sell entry, which is I already have a sell over here, I'm gonna like aim around this level, like 29.05 or 6. Okay, like maybe I just close or take. You can just now it's falling. Okay, I will put at like M15 support, which is I think that will be 50%, meaning that I have already sell entry, right? I will close here but take profit for scalping in M15 trade setup. Okay, any question? Okay, let's see with the price before. Somebody asked me for oil. This one. Okay, when it's based on the daily time frame for oil, you to see like that the market structure is not very clear. But what I can see that price is at the support level. Maybe there might be the divergence here. Let me see. Yeah, there's already divergence, so that's why you buy, right? You buy oil here. is formula support level, and there's a divergence, bearish. This is a bullish divergence, okay? And here, we will target, if you were to buy, this is going to be your overlap support level based on daily time frame. Then we go to H4. You see that? Did you see you buy entry? Lovely, your price action over here. Did you buy? Somebody asked me for oil just now trading mask. It is. You see that? You see the lovely divergence in H4? It's here. Right? And then they also give you really lovely wick, or your price action or PA is right here. Okay, so with your take profit or your TP. This one is look like if price break above this this one, you need to wait for price to pull back. If pull back, you can sell, right? Meaning that if price pull back to this neckline and then you sell up, or you buy up. Okay, so you need to wait for price to break above this high, which is this is the small like resistance level, right? If they break above this high, meaning that you look at market structures, lower low, lower high, lower low. If they want to continue from this, they need to go lower like that, right? But if they change of market structure shift, you need to break above this previous high, right? Make a market structure pull back, you buy up. Meaning that you need to watch out this level, which is you need to make a tag is what stand for market structure shift. Okay, yeah, I make it bigger. So if they break above this one, okay, you can pull back. They might come here, or if they break above, I saw there is a demand, so you wait for price to pull back here, and then either here or here, and then you buy up. Because okay, somewhere right here she line up with Fibonacci. I cannot draw Fibonacci yet because the high haven't finished. Price still rising, so you need to wait for price to form the high first, and then you draw Fibonacci. Okay, but this you need to watch out. Make a market structure shift, pull back, maybe to this zone or maybe to this zone. Okay, and then you buy oil. Okay. Okay, let me highlight the key level. This is the resistance level, support level. Okay. Where the resistance? You know why I did not draw this one at the like a resistance level? When you say that okay, seems like price break below this level, okay, bounce up, then why you go up? Because you need to look at the I side as well. When you trade, you look at the I side here. Okay, price come from the support level or demand. So basically, if price come from the like demand or support, and then there's a divergence here, usually price will go up to the another level, which I'm looking. I look to the left. This is the level. If I were to buy here, this is going to be my take profit for the buy entry. Okay, so it's even rising. You need to take note of this week. Okay, so the next resistance level I'm looking for, I look to the left, intersect, which is here. This is gonna be my first resistance level. Okay, and I think that will be 78 somewhere, slightly above 78.6%. I will just put here, refer to this and like a pullback as 61.5% fib. Okay, for the first resistance level. This is gonna be my support. So if price pull here, you buy. Okay. You also can use extension if price break above this high. What you need to use? Remember, we study extension. That will be where should be 127. exact here. So it's gonna be your sell zone. And over here we have Fibonacci line up together, which is what, 61.8% fib just now, right? You can see that. So this is gonna be your sell entry for oil, somewhere around this level. Okay, if price break above first resistance level, where is your another resistance level? Here. If you follow me, my trade setup is really basic, but it's really powerful. Like I always tell you guys, if you know how to identify the key level correctly, you can trade. Okay, you can trade. You can then after that you can combine with Fibonacci. You can see that I have quite confident that price going to fall from this level. You might see like a pullback or retrace. We have extension. We have 161.8. If I were to go to the lower time frame, maybe in H1, this is gonna be what? Resistance in H1 as well. Maybe M30. I have there's like supply zone over here. Right? This is the zone if you go to the lower time frame. Right? In the lower time frame is here. You know why I don't adjust? Again, if you draw Fibonacci, if you identify the key level, if you even go to the lower time frame, you know lower time frame have a lot of noises. If you go to M15, you see, hey, this is not a level, then you adjust here. But I don't adjust because I'm drawing from H4. Different time frame have different key level, but you need to reference on a higher time frame. Okay, in the lower time frame, if you want for scalping, you can. Yeah, this is the one. I draw this one from this high. So you price break above this high. This is the target, right? So we sell here. You're gonna sell here. If you see the confirmation, you can buy up from this level, or you wait. Price come to first support level. Okay, because here have a demand also. Then you buy. Any question, guys? You can. Okay. If you follow my live trading when I did that, I haven't changed my level since that day. Okay, for IC when I did, you can see that price come from the support level almost touching, and then you bounce off. Now it's at the resistance level and then reverse. This is still the key level. This should be like, when was that? To be like last, I don't know when I did the webinars. Okay, the live trading. Okay, let me just remove the drawing. I go to the higher time frame first. Okay, you see that on the daily time frame, some of you guys may identify this your demand, right? Demand here, or you can see that ending with bullish engulfing candle, or you could just say like bullish order block. Okay, like over here, based on the, let's say, I think here also they have extension for daily time frame, should be 127. You can see that just slightly below there is an extension, but I don't use it. If I draw 50%, it's just below here. So even to look like that, you wait for the sell entry for USD CAD, because price already break below here, right? The support level, and they create what? This one, the supply, you will see there's a supply here. Okay, so pull back and then you sell, right? Remember I said that if price break below this level and then you sell. You wait for pullback and then you sell. Okay, go to H4, right? This is the level. 78.6%, that will be your first resistance level. Your next resistance level, that will be 50% fib, which is this high. Right? Second resistance, not the first. We have 50% and we have 23.6. So if price reward at 23.6%, meaning they only have small pullback. Okay, so basically you want to sell at this level. I give you the I know some of you guys say the zone is quite big, so that's why you need to wait for confirmation. You wait for price to come in the zone. Okay, come in the zone. In the lower time frame, you will see those like chart pattern, price action or rejection. Okay, in this zone, and then you sell. You will target where your support level. This is your first support. This one. Okay, I will make the extension to this 127 slightly there, which is we use 127 color, and then you highlight the zone. So this your support zone, right? This here. Okay. Thank you, I win. What do you win? What do you do? What do you win? You win. You win what? Go falling. Come hit my TP. I'm waiting for my TP at 2906.5. That's gonna be my TP one. Gatle pattern section was wonderful. Thank you. So for the next Tuesday, I'm gonna continue with Harmonic pattern part 2, which we will go in depth on those like pattern. Okay, I would like share with you guys how you're going to play the take profit, how you're going to put the stop loss based on Harmonic pattern strategy and Fibonacci level, like TP1, TP2. You can do that. Okay. You're welcome. So anyone short go, should I just close and go home happily with with go now? I feel it's like 20 actually. Okay, I'll tell you guys. I hold my tracing man, I short here. You look at this week, right? You can look at this week here. Okay, price falling to this, I did not close, and that is rebound. Go back up here. Okay, I from like a profit, I did not ship my break even or stop loss to my break even is rising. Okay, and then now it's falling. So I'm not sure whether should I just close now and happy with profit. Okay, I just need like 20 pip more. We'll see how later. Okay, all right guys, thank you so much for your time. I will see you guys again in the next webinar. All right, okay guys, bye for now. Thank you. Bye guys, take care.